Welcome to the Stock Market Morning Prep video for Monday, September 8th. Back to work. I am very excited to see that the summer now is behind us. We had a very, very quiet summer. On top of that, the last 2 weeks have been even worse. Coming off of the Labor Day weekend, all of the big players, market participants, the money managers, fund managers, finally they should be coming back to work this week, and that's going to really start elevating a little bit of volatility. And I say that lightly, a little bit, because we've had really none. But anything is welcome right now. So it's going to be an interesting fall. We're at these elevated levels, and we're at these extensions, and we've literally gone nowhere the last couple of weeks, just kind of grinding higher, drifting lower. So it's going to be really interesting to see if this market has additional legs to push to the upside. So today, I'm just going to be looking at the indices just to kind of refresh everything going into this week. We have very little econ data this week, so it's going to be pretty much more technical. Today, really just consumer credit at 3 o'clock, and then we had some job openings coming for tomorrow, and then, of course, wholesale inventories, MBA mortgage index on Wednesday. So really nothing to write home about. Some retail sales coming out at the end of the week. So it'll be interesting to see what happens this week. I am looking at the dollar in front of you. You see the dollar has exploded to the upside. One of the culprits of putting crude oil down at these levels, as well as tensions in the Russia-Ukraine, not really too much in the headlines. Additional supply, so that's really killing crude here. 92.50 in crude oil is going to be a real big spot. I'm watching that sector for any possible retracement rallies. They're looking to buy, and then looking for some of the oil services. Now the builders are looking really interesting too, because we did have some good home numbers come out. So I want to see what's going on with the builders. We did manage to look last week, I believe we looked at some building stocks, and they broke down from a horizontal base. So let's see if we get some renewed buying interest. So I'm going to be watching those builders as well. Some of the solar sectors looking really good. So there's a lot of good stuff out there. The problem is that they're not really moving, and if they are moving, they're fading back to the downside. So selective stocks aren't moving. We have a bunch of indices that are looking ripe for a big move higher. And it's a matter of basically hurry up and wait type game. But it is good that we have a lot of people coming back to the marketplace, and that should really help us out here. So, all right. So we have the dollar index, and again we're up again this morning early in the pre-market session. So where do we go with this thing? So as we know, dollar strength, you're going to have weakness in. Well, aside from equities, but now it's like a mixed bag. The relationship with equities actually can go back and forth here. You have foreign nationals that would love to put money into the market, and what do? They have to convert their currency into our U.S. dollars, which is going to be more of a demand for the dollar. So that's actually a good thing when you have some foreign money. Or it could be that larger groups see something that may scare them in the marketplace. The market's so elevated, so they run and hide and put their money in the dollar and utilities, and that's safe haven currency. So there's two ways of looking at it, and right now it looks like the first one I mentioned is really what's happening, because the markets aren't selling off, and they just continue to hang at these levels. So just something to think about. It's a little iffy here at the moment, and obviously I wouldn't be buying dollars anywhere in these areas here. We're extremely elevated, and at any given time we could start to roll, and we do have this little cluster here with a bigger 1272. Usually the first area we get a little bit of a pullback, so we shall see. Let's keep an eye on that intraday. Here's the ES. As you can see, really we've gone nowhere. We just literally stood up in here, and 2000 was that inverted head and shoulders that we identified several weeks back. We hit our target, and then of course 2006 was the extension. We hit that as well, and now we're just kind of sitting here. We haven't really gone anywhere, as you can see. Highly elevated, but this is not a bearish pattern here. This is actually bullish, hanging above the 2000 mark. So if anything, maybe get another shot here. This is the weakest of the bunch, but really also not doing too bad. Right here just looks at a clean bull flag pattern, just like this. looking for a move higher. Again, we did hit that 1272 from this area here, from high to low. And then the next area, this bigger 618 is holding right now this any type of rally. So we'll see if this is a bull flag and works out and starts to break higher again. But again, this is the weaker of the 5 indices that we follow. So that's something that really needs to be watched closely. Now, the transports, which is the leader here, this is our leader, and is moving, continually move higher. So it looks like it wants the 1272 extension here. Pretty close on it, tagging it. Why not? It's pretty dumbfounding. It's actually amazing that we get all of this. We have a huge move up, 3 days just pushing lower, and the next thing we get to explode higher yet again. Absolutely amazing. Now, we all understand about the oil, and it's cheaper, and they benefit their bottom line, and I get that, but it's, after a while when you move up directly straight up and you had a couple down days just to move higher again, it's pretty amazing stuff here. But it's the leader, so if the leader continues to do well, don't fight it, because the markets will move higher along with the transports. This is our main leader. Then we have the diamonds here, still double top, not doing too bad. Underneath the high, so there's nothing wrong with the diamonds as well. So, I mean, the indices are fine. I mean, even the Qs, you see the Qs here, held up well with the 3-day sell-off in Apple. But again, if you get into the Qs, you have a selective group of stocks that are moving, and the majority of stocks just aren't really following. We don't have a lot of follow-through on the intraday basis. So, indices look right. Our indicators are beginning to unwind from the overbought reading. So believe it or not, the path of least resistance continues to be higher until something changes. So don't fight it. Keep with the trend until it ends, and then we'll just keep reevaluating, looking for sectors and stocks that we can actually get involved in. And believe it or not, the way I'm looking to play this for going into the fall is look for stocks that have continued to base or have sold off, maybe in a previous quarter, a downgrade, and then wait for that base to be breaking out to the upside, following the trend, which of course is up. That's really going to be your best and safest way to play it. Now, it is going to be boring because obviously this is a stock picker's market right now. And until everything starts humming along again, that's the reason why you're going to have no choice but to play individual stocks or sectors that maybe have really been really quiet and starting to move again. All right, so one of the good ways of playing that is looking at some of the ETFs. They're going to really give you clues of what sector is moving. Dial into that ETF and pick the best, 2 to 3 charts and really hawk them and put some alerts on them. So that's what I'm going to be looking to play going into, obviously, today and the rest of the year. All right, guys, have a great day, and we shall see you tomorrow with another update.